Hey everyone, John Doan here from Equinox Home Financing. Today I'm going to talk to you a little bit about rental property loans. If you are looking to invest your money into real estate as an investment property, I want to talk to you about the available loan programs that are out there. And today, specifically, we're going to talk about one of the best loan programs that are easy to qualify for. It's probably the easiest rental property loan that you can get out there if you've got the credit and the down payment for it. So it's called a DSCR. It stands for Debt Service Coverage Ratio Program. Basically, it means that this loan program is not based on your personal income. Instead, it's the income that the property can generate. So for the last 40 years on commercial property financing or commercial real estate, if you think about it, if you wanted to go out and buy an apartment building with 100 units in it, how do you get qualified? You may not have enough personal income to buy a $10 million apartment building. So how do people get approved? Well, I'll tell you, it's based on what rent or income that property can generate. And as long as it debt services or it covers your new mortgage payment that you're about to borrow, then you're good to go. That's why it's called a debt service coverage ratio program or a cash flow program. Now, about 4 or 5 years ago, lenders and investors brought that loan product or program or concept to the residential side. So now you can go buy a condo or a single family home up to 4 units and be able to use this program in order to buy. Typically, the lowest down payment is 20%. Usually loans don't cash flow unless you're doing 25% down, but I've seen a lot of loans work with 20% down. Literally, I've had several clients now that have been building up portfolios for the last 4 to 5 years. Some of them are on their 14th property, some are on their 5th property. It's a great way to buy. So again, as long as you have the down payment funds and you have good credit scores, you'll get qualified as long as the home will cash flow. So how do we know if it's gonna cash flow or not? Well, I'll tell you. Once you get into contract on a new home, or if you're refinancing and we order your appraisal, the appraiser will go out and do a standard appraisal to see what your home is worth. On top of that, he's ordering what's called a market rent survey, a form called a 1007. And what that market rent survey says is what the average, homes are renting for that are like your home, that you're either buying or that you own. And whatever that average comes back on their appraisal report, we look at that number. And as long as it covers your new mortgage payment, including taxes and insurance and an HOA if you have one, then you are 1 for 1 and you are good to go. And that's how you can buy a rental property if you don't have any income. Thank you so much. Subscribe to our channel below so you can find out more about home financing.